Good morning, everyone, and or good day, everyone, and welcome. Today, we really are going to be looking at the effect of COVID on African fintech, and I think a fascinating subject given how Africa has had a particularly unique use case and positioning with regards to fintech well before COVID-19. As a start, I'd like you just all to introduce yourselves, and I'll let you know who's going to go first, and I'll run the sequence of that. Just a little bit about you, how you fit in, and obviously just your role within the financial services and fintech and technology and innovation sector. Miriam, let's start with you. Good day.
Good day. I'm Miriam. I'm the Chief Revenue Officer of AZA. So for those who don't know, AZA is a foreign currency and infrastructure company that helps businesses trade in, out, and around Africa. We have a footprint of around 10 countries where we operate in Africa, and we are a market maker of African currencies, helping remove the USD reliance on the country. We are the largest non-bank broker for foreign currency in Africa, processing over 1 billion transactions a year. And even in COVID, when ports and borders have been closed, we've been contributing to intra-African trade as well as growing businesses in general, because we made it easier for them to access foreign markets and for foreign markets also to reach us in Africa. So that's in summary.
Miriam, fantastic. I'm really looking forward to hearing a little bit more about that. Good day, Stephen.
Ian, thanks for the opportunity. It's great to address this audience. Yes, I'm the divisional executive for the telecoms division within a company in South Africa called Adapt IT. We're very much a specialist software development house. And we split into very specific market sectors. So the sector I focus on is obviously telecoms. And within the telecom sector, we develop software, everything all the way through from your customer experience, through your IoT, value-added services, and I think with a very specific focus, which I think speaks to today's discussion, is on fintech or financial inclusion. And I think our focus is Africa and rest of Africa, and this is kind of very much where a lot of our experience stems from. So yes, looking forward to a productive discussion.
Thank you very much, Stephen. Looking forward to chatting further. Good day, Kieran. Hi.
Good day, everybody. I'm Kieran. I'm the co-founder and CEO of Mr. Green Africa, and we're a circular economy or circular plastics economy company who's leveraging software technology to basically close the loop of plastic from the consumer all the way back into a packaging. And our place here is the moment we started a couple of years back this business, software was always a very important part of it, and this huge informal sector that we're trying to include and formalize in this supply chain. We also started and ventured into financially include them through that software talk, because obviously we can create for them a history of income, and through that history of income and that sort of traceability and transparency that we create with the tech, we basically also want to financially include them and create an innovative part on formalizing an informal market in emerging markets. So pleasure to be here.
Great, thank you, Kieran. Good day, Wasim. Hello.
Hi everyone, look, it's great to be part of this Africa Tech Fest. Just a bit of background, I'm the sector strategist for financial institutions at CDC Group. So I'm responsible for our overarching kind of development and investment agenda as it relates to financial services sector. And, financial inclusion has been a big theme for CDC for a long time. Like other DFIs, we see it as highly developmental. We see, integrating people into the formal economy, as critical. And so, we have a history in supporting, microfinance, retail banking, and now increasingly, we're turning our attention to digital financial services because that's the next frontier to bring people into the fold. And not just people, obviously, this, financial exclusion also applies to SMEs across the continent. So we're focused both on people as individuals and on entrepreneurs.
Awesome. Thank you very much for that. Good day. Chris, hello.
Yeah, thanks very much, Ian. I'm Chris Waby. I'm the chairman of Lendable. We're a business that provides senior secured lending to fintech players across Africa and also broader emerging frontier markets. We operate across 5 segments: MSME, consumer, asset finance, payment platforms, and marketplaces. We've been operating for about 5 years. To date, we've ingested around 15 million loans, and looking forward to the discussion.
Great, awesome. Thank you, everyone. So I think just to create a little bit of context around our discussion today, I think fintech, has played a pretty revolutionary role in Africa. Certainly over the last 5 or 6 years, I think we've seen a democratization of a lot of services. I think we've accessibility. There's definitely an element of transformation, and certainly has improved people's lives. I think we've seen costs come down. We've seen value chains get shortened. We've particularly seen people have the ability to make payments where they weren't able to do so in the past, and make cross-border transactions at a lot lower rates. We've seen access to finance, which I think has been really a very positive thing in Africa, and I think that was pretty much initially facilitated more by the mobile network operators than it was by the banks. But now I think we've seen an increase in the value chain. With the advent of COVID and I guess social distancing, we've seen, certainly from my perspective, this massive acceleration of digital adoption. And where I think we've been a little bit behind the curve, especially on e-commerce, we've seen some pretty radical changes in consumer behavior, albeit off a very low base. But I think it's forced Africa to adopt larger components of the digital value chain just through habit and through circumstances. And to me, that's an incredibly positive thing. Needless to say, the downside of that is that people, who don't have access to the internet are getting further and further, behind. And, I think if anything, it's thrown up the digital divide. But, my view firmly is therein lies an opportunity. So my first question really, and from your viewpoint of exposure to the continent and within the sector, have you seen digitization of product development create efficiencies within the system? Are we seeing greater adoption of digital transformation, throughout the value chain? And how has this kind of played out in product offerings? And Wissim, maybe you want to start this one off, because I know you were quite involved in that digital factory, which sounded very interesting. And I'd love to hear how that has aided the product development.
Yeah, no, absolutely. So we, CDC in 2016 invested in I&M Bank in Kenya. And, after we invested, we helped them with a strategy refresh. And a core pillar of that strategy refresh was to undertake a digital transformation. And so what we helped them do is set up a digital factory, which now consists of around 40 employees, to start implementing initiatives in the areas of automation, advanced analytics, innovative front-end solutions. And we help them resource that digital factory with UX designers, developers, digital specialists. And that's not an easy task to do, because across the continent, tech talent is, it's like gold dust, so it's difficult to find. That this digital factory operates very much like a startup within an incumbent organization. So it operates lean, agile, rapid prototyping, rapid deployment of solutions, quick iterations, and it's fantastic. They, a great example of what they've done is they did a full automation of their customer onboarding process, right? And they reduced the time for a customer to acquire an account by 67%, which is huge saving. So yeah, absolutely. I think digital transformations, incumbents should definitely embrace that.
Fantastic, Wissim. Thank you. That's an exceptional example, and that was in Kenya, if I'm not mistaken.
Exactly, I&M Bank, Kenya.
Great. I'll just open that to the rest of the panel, and from your viewpoint, how much digital transformation, automation have you seen creating efficiencies within the financial services value chain?
Thanks, Ian. I think we've seen a lot of digitization, both from the mobile network operators as well as the banks, and I think everybody knows that banks are wanting to play within the MNO space, and the MNOs want to play in the bank space, and it's quite interesting to see the diversion of that digitization. And I think very strongly banks are realizing that the only way you're going to be able to get to people is obviously by digitizing your solutions and offering a digitized value offering. But I think where sometimes we see that a lot of, or the space that's been ignored is we still have about 75% of adults that kind of earn less than $60 a month. And therefore they don't have a bank account. And I think if we compare the 10% of people in developed countries who don't have a bank account with the 50% of people in developing countries that kind of also do not have it, I think there's a large audience which is not being addressed. And I think this is some of the areas where we feel that digitization probably needs a focus. And I think what COVID has done is it's accentuated this, because now those people that used to take their money, walk to a particular pay point and either purchase or do a swap out, weren't able to do that. And I think it cut them off. You mentioned it in the beginning that the divide seems to have got a little bit bigger. And sometimes we think that some of the deficiencies within the digitization side of things, and this is where I think both the banks as well as the MNOs are trying to ramp up, is to try and address those areas that will have a more inclusive offering, to address those people who don't earn enough to have a bank account, to increase things like simple financial literacy, to how do I interact, how do I get this thing to work, how do I address the fact that a lot of people don't have formal identification, how do I build where there's a lack of trust, where people don't have bank accounts, how do I kind of get there? And I think that's probably what we're starting to see merge, because banks realize that they can't go it alone, mobile network operators realize that they can't necessarily go it alone, and you're starting to see this divergence of the digitization to actually bringing these two worlds together.
Fantastic. Stephen, would anyone else like to add to that? Chris, all yours.
Yeah, this is Chris. So I think from our perspective, we've seen really the agility and the flexibility of being digital throughout the kind of COVID crisis. On our side particularly, we integrate with all of our borrowers' CRM systems, all their internal systems, and we verify that data with their bank accounts. And what that's allowed us to do is we receive that data on a daily basis, is to be able to continue to lend through COVID, having a very good assessment of how repayments have been occurring on our client level. And in fact, we had our record month in April, and that's been on a profitable commercial basis. And then if we go down to our client level, what we've seen is that all our players are digital, but the digital nature of our borrowers has meant that they also have been able to restructure their offerings very quickly. I'm thinking in particular of a motorcycle taxi leasing company that we have in Kenya. Trackers on all their vehicles, and we're able to see that the vehicles were being used much less, therefore generating less revenue, and quickly restructure their tenors, both in the existing book and on new originations. But I'd say we sort of crossed the portfolio. So on sort of branchless lenders, we've seen them quickly reorientate their origination process in a way that you probably couldn't with bricks and mortar. So very quickly changing their offerings, very quickly changing the underwriting criteria. And again, all of that's meant that capital could continue to flow through COVID and do so in a commercial way, so not increasing loss rates.
That's fantastic. That's very, very encouraging to hear that, and well done. It's great to hear that sort of a benefit. Miriam, all yours.
Well, I just want to add a very small comment on what Stephen just said, because it's really important. I mean, what he said is totally true in Africa, is that most of the banks have built a large and heavy infrastructure around the physical presence, the physical visit of the branches. And even when you see, I mean, now all the ATM manufacturers and others, they build this digital experience, but on the ATM in the branch. And this is where comes the experience outside of the branch, that today fintechs or other companies are more agile in creating this digital experience, digital, let's say, journey that should not get the customer to leave his house and do every single transaction just from the comfort of his home. And this is what is touching today the unbankerized also population that is much easier for them to do the transaction via their mobile rather than going through an agency, especially knowing that in Africa, we don't have that much footprint in terms of agencies, branches, or ATMs. So I think that Stephen got a point here as well.
Great, Miriam, thank you. Thank you very much for that. And I think that's a nice segue into my next question, really, and that is around, there's been a lot of talk around moving towards a cashless society, and, needless to say, that was certainly accelerated during COVID, which started to create, many more use cases for us. And I guess there my question is, do we believe that governments could be playing a stronger role in driving and increasing cashless transfers? So, for example, they could most definitely start creating the use cases within their own value chain of health and education. Wasim, I'd love to hear your view on that.
Yeah, sure. Just briefly, I mean, where we see significant, because we operate in South Asia and Africa, and one of the great things of that is we can take learnings from one part of the world and transfer them to other parts of the world. And what we see that works quite effectively for digital payments and mobile wallets is when the government comes in and we start getting G2P, government to person payments done digitally. Right, whether it's welfare payments, whether it's tax rebates, and I think that for us is the single biggest driver of mobile banking, mobile wallets, because what you really fundamentally need is behavioural change from people, right, to move from dealing with cash to using mobile wallets, and that's a difficult move to get countries and people to make, and with government encouragement, for me, we've seen that's the best way for it to happen.
It's been great, and I fully concur. I think that use case driver really needs to come from the top, and it's almost a pity we don't see more of that. Chris, your hand is up. Is that from last time or no? Last time. Miriam, anything you'd like to add to that?
Yes, yes, I agree with Wasim. What is happening today is that the mobile experience has been conquering really the new world. I'm talking from an African perspective, and this lack that we were talking about in the previous question about the banks not targeting the large proportion of unbankerized people just created this need to go to alternative options or solutions, and the mobile has definitely raised as the best way to compensate for this lack.
Great, thank you. Karen.
Yes, I just want to add also a different perspective. We can talk about governments, but I think it's definitely in the various different use cases where you have the majority of the population engaging with mobile transformation. And I think there it's like rent. Everybody pays rent, right? If landlords start transitioning into getting paid with mobile money, and we see that largely in Kenya happening, where the most normal thing is to pay the rent via M-Pesa, for example, and things like that. So I think it's also huge sectors or industry where it's a vast majority of people that are engaged with this kind of behavior of a certain thing that we have been paying physically, we can now pay digitally. Completely second what Wasim said, that these kind of like taxes engagement, etc. I think that those are use cases that really show the transformation. What we have seen, and that's now the flip side of the coin, is that what we have seen is a big hurdle of people even being able to get to the point of becoming digital. So we work with a largely informal population that sometimes they don't even have IDs to get a phone, right, or a SIM card and getting access to a phone to be then bankable, etc. So what do we do with that population, right? Because if everybody who can transition into the digital age, and the ones who still have certain barriers to overcome, who can't, they will be left out, and then we even further the gap, right? And so we, as Mr. Green, we have tried to be thinking about how can we support these population to even start at the transitioning into becoming formal from an ID standpoint of view before we then bank them or make them bankable, right? So that step in between, I think, as us as digital services providers, we should also think when we talk about customer experience, we should also think about those barriers and how we can lift those barriers. How can we collaborate with government? How can we collaborate with institutions to make the people who even have the barrier of like, yeah, you just need to come with an ID, but what are those people going to do who don't have an ID? And I think that's where the term collaboration and partnership with government can really play a huge role. So not just moving everything digital, but also the element.
Karen, great. We just lost you there for a second. Stephen, is your hand up from this time?
Yes, Ian, I just wanted to maybe just follow a little bit on from what even Kieran alluded to this, is sometimes the governments don't realize what a strong catalyst they are to change. And sometimes we find that through regulation, a lot of the innovation and a lot of the innovation that supports and is driving digitization just doesn't get off the ground. And I think Kieran also alluded to this, is we still have this huge undressed population who aren't really economically active because they cannot be, and because a lot of this is tied up to having to have some kind of access and the ability to be able to transact using the traditional fiat currency, whereas if we found that most of the mobile network operators already have resellers or merchants that operate within rural areas, they're mobile, and to start looking at things like airtime as a currency and being able to allow people to transact, because this will allow a larger portion of the population who's undressable at the moment to actually get active. And also, it won't mean that they have to get fiat currency into the system or out of the system if they can use something that's already there. And I think airtime as a currency is just an example of that.
Absolutely. Thank you.
Sorry, I was dropping off. My internet dropped.
Fine. Welcome back, Karen. I think we got the gist of it. Is there anything you wanted to add before we lost you?
No, you got the gist. All good. Thank you.
Great. No, thank you. Thank you, everyone. So looking at it from a merchant perspective, merchants have really been at the coalface of the changing of consumer behavior as a result of COVID. Do we believe that fintechs, banks, financial institutions have in turn supported merchants to offer alternative channels to connect to suppliers and customers? I think that's, I'd love to hear from your view, and, perhaps Miriam, you can come in here. One of the ways that, COVID has affected the world, I guess, is trade and travel and international borders. And, maybe from an African perspective, this has been particularly severe because, we perhaps, from getting raw materials to reach their final customer, there's more distance, it's more remote. Do we believe there's a role that fintechs can play with tackling cross-border problems during COVID?
Yeah, well, actually for us, we come really, as I said, even before the fulfillment chain from e-commerce vendors or to customers. So our role comes really when the e-commerce merchant has to buy the goods from China or Europe in the first place. So goods have been even more scarce during this time. From medical goods to grain, anything that African companies needed to bring in. You just mentioned raw materials. Everything was really scarce, and this is the problem, was mainly the lack of currency to buy. So what we were doing is that we were able to prioritize such emergency payments and to make it possible for local African companies to import essential goods. So basically what we've done is we made cross-border trading possible when the pandemic made it really difficult. So I think that this is the thing, is that this pandemic showed that going outside of the traditional network can also help answering some questions.
Great. Miriam, thank you. Anyone like to add anything to that? But Miriam, thank you. That was very insightful. I guess, Stephen, yes, all yours.
Sorry, and I'll try and be brief. Yeah, I think Miriam pointed to a big problem, and that was the ability to be able to move goods across border and to the areas where they are, and she was 100% spot on. But the problem sometimes went a little bit beyond that, where even where there were goods available, somebody didn't have the ability to be able to transact so that they could acquire the goods. And I think this was always is always going to be an issue when there's a pandemic. But sometimes these are real life issues even now, just because of the rural geographic placement of people. And sometimes the reason why people can't extend credit is because the person doesn't really have a good credit record, or they can't measure the credit worthiness of somewhere. And I think it's a way in which a proper collaboration between potentially banks and telecommunications